The Fiscal Fortress, where wealth meets wisdom.
Happy Friday, Eric. How are you doing?
Yeah, doing really well. Doing very well. Looking forward to this podcast and also this weekend. Looking forward to celebrating my 4-year-old's fifth birthday party. So that's gonna take up like half the weekend, and it's gonna be fun, but probably pretty tiring.
Well, sounds like a lot of fun. Please send me a picture or two. So, for our listeners, for this episode, what are your thoughts in terms of you? Do you have a topic for us today?
Yeah, there was some big news, and Warren Buffett. It involves Warren Buffett. Yeah, I'd like to talk about his retirement. Anybody who is new to the podcast, I'm a hedge fund manager. I've been running a hedge fund, a long short equity hedge fund for about 15 years. Interestingly, I also used to be a corporate lawyer by training. In between law and running the hedge fund, I was also a professional poker player for a couple of years. And along the way in my professional journey, I also spent more than 5 years at Coinbase as the chief operating officer of Coinbase Custody. And in terms of Fiscal Fortress, this is a collaboration between me and Michelle. Michelle is a very seasoned corporate lawyer, trust estates lawyer, and real estate lawyer. And we tell the unvarnished truth about legal and hedge fund um, issues or investing issues, rather. And our goal for every single episode is to help people either make money or save money.
In terms of our topic today, you mentioned briefly we were going to talk about Warren Buffett. The news is out. He has announced that he is stepping down as CEO of Berkshire Hathaway by the end of this year, with a new person to take over. And his name is Greg Abel, but I haven't heard much about this person. And what is your take on this? Why is this so monumental?
Well, it's monumental because, in just about everybody's mind in the world, Warren Buffett is the GOAT, to take a sports term, the greatest of all time at what he does, which is investing. And he's the CEO of Berkshire Hathaway. So this really, really matters. It matters for any investors of Berkshire Hathaway. And among our listeners, I'm sure there are many. And it matters for just people who are interested in investing because this is a public company. It's a part of the S&P 500, and how this transition goes is important for the markets and just people's confidence in Berkshire Hathaway and American companies. One thing I do want to talk about is just Warren Buffett himself. I mean, I'm sure everybody knows a ton about him, so I won't go into a ton of detail. There are multiple books written about him. In particular, there's a really good one called The Snowball. It's a long read, but it's a really good um, biography of him. But the highlights are, Buffett for decades has been compounding money, and he originally started as a fund manager, similar to me, and then uh, eventually transformed his company into the public company that it is today, worth hundreds of billions of dollars in market capitalization. And he is one of the legendary 20th century investors who championed what people call value investing, although that's a bit of a misnomer. Charlie Munger and his partner, who passed away a few years ago, and Warren Buffett has always said there's no difference between value investing and growth investing. It's just investing, and growth is a part of whether a stock is valuable. But basically, they are the people who really popularized the idea of doing a lot of fundamental research, holding for the long term, having unwavering confidence in the United States. And because he's been right so long and his investment returns have been so good, he has been called the Oracle of Omaha rather. And he seems to always have a crystal ball, always making the right moves at the right time, way before other people, catch up, especially Wall Street. Wall Street always seems to be a few steps behind him. And he's just a really, really interesting person who's very wise, soft spoken, well spoken, and somebody who doesn't live in New York or San Francisco. He lives in Omaha in the Midwest in the same home he's lived in for decades. So this is in a very real sense the end of an era.
And who is this Greg Abel? Because can we trust him as just following his moves in the market, as many people did with Warren Buffett?
Yeah, I mean, Greg Abel has been with Buffett for many years now, and it wasn't clear until recently that he would be the heir to the Berkshire, companies step up to the CEO. But he has been with Buffett for many years. There isn't like a ton of information about him. I mean, there's stuff that you could read about, and again, I won't bore you. You could do a perplexity search and read his bio, but they're not, generally speaking, super into the limelight. I think for the purposes of this discussion, what is really important is that he is very much has been with the company and has adopted and is very aligned with the investment philosophy and the mindset of Warren Buffett, and I think that's the key thing that we really need to focus on.
Or people probably he has to prove himself first because he's not nobody's ever heard of him before.
Yeah, I mean, it's true. Like again, they shy away from the limelight, and uh, you probably most people wouldn't be able to name like the other people who were considered to be the CEO. It wasn't just Greg. There were multiple people who were in the running, so to speak, until just a few years ago. Um, but, just so people know, Berkshire Hathaway, they have a lot of, they own Geico, and sort of they're experts in insurance. They have a lot of assets and they make a lot of money from the insurance business. Greg Abel, until he was recently promoted to CEO, and I guess that doesn't take place until later this year, but he was the current non-insurance head of Berkshire Hathaway. And you're absolutely right that it's a little bit of a wait and see, um, game here, and we can elaborate, into why that is in a moment.
So before we get into the details about Greg and Berkshire Hathaway, um, how can our audience access more of your expert insights, Eric?
Yeah, great question. So, the first way is I wrote a book called The Long and the Short of It. It's for sale on Amazon, but also just as a thank you to our listeners, if anybody wants, the first 5 or 10 people who, uh, email me, I'm happy to send you a complimentary, signed copy. The second way that you could get in touch with me is on my website, lighthavencapital.com. So you'll see my email and my website below here. And the third way is, through the Fiscal Fortress. Feel free to like and subscribe this video. This really helps us a lot, and it's a great way for us to keep in touch.
So, Eric, now that the news is out, how has the stock price for Berkshire Hathaway been impacted with Buffett's departure by the end of the year?
So that great question. So yeah, right after the this was announced, initially the stock did dip several percent, and then there was some stabilization. Um, but it's important to note that year to date, the stock has done really well. In fact, it's done better than the market. So I think this reflects that there continues to be confidence in Berkshire Hathaway as a company, but nobody likes uncertainty, and definitely some people did sell, um, because there is an erosion of the so-called Buffett premium. I think that's real, and we need to give it more time to see what will happen in the medium term.
Yeah. Are there is there anything unique about Greg Abel that you have picked up?
Yeah, he's a veteran, like, as I mentioned, he's the head of, he's been with Buffett for many years now. He's the non-insurance head, and by all accounts, he's very sharp, he's very disciplined, he's a long-term investor, and at the risk of repeating myself, he very much, has the Berkshire DNA. Um, the other thing, so I think the most important thing about him having that DNA is that the culture of Berkshire won't change. It's not a very large company, but the investment culture and the way that, they make decisions, theoretically, you wouldn't expect that that would change because he's been, so steeped in value investing. And what does that mean? As a value investor, and specifically Berkshire Hathaway's style investing, They're very, very long-term investors. They rarely sell. They're not trading in and out. Um, when they buy a company, they're famous for saying that, they wanna their ultimate, optimal holding time is forever for any company, and they're very decentralized. There are a lot of companies that where they basically micromanage all of their portfolio holdings, and Berkshire Hathaway is very much a portfolio holding company. They own lots of both public and private companies under their banner, and they're basically doing capital allocation. But they've always made it a point of investing in companies that are run by people that they really like and trust, and letting those CEOs do their thing. If Greg sticks with those principles that have served them so well, that should be really good. I think a natural question is, and in a lot of people's minds, how much does one person matter? Given the fact that, at this point, Berkshire Hathaway, is infused with the Buffett DNA. You know, how much does the man matter versus the system?
Now, we promised our listeners we would either, for every episode, either help them save money or make money. So, getting to the bottom line from an investment standpoint, and understanding that we're not giving any investment advice. How should people look at Berkshire Hathaway at this point?
Yeah, so I first want to just say that this is not investment advice. So you should do your own research. You should consult your own financial advisors. This is just my opinion. Um, I think that if you are um, a long-term holder and you already have bought Berkshire stock, you probably want to just watch, wait and see. Um, and I'll explain in a little bit more detail why I'm saying that. Um, if you are a new investor, you don't currently hold Berkshire stock. If I were you, um, I'm not sure I would rush to buy right now. I would also wait and see. But what I would do specifically is I would let the market digest the news right now and observe how Greg Abel does, specifically the decisions that he make. What is he buying? What is he selling? What is he doing that's different than what Buffett did? I think the reason, just to elaborate, is, and I mentioned this before, that there is a premium right now because Berkshire Hathaway is run by a legendary investor, somebody that everybody has complete faith in. And as I mentioned, he is the GOAT. He's the greatest of all time. And so Greg Abel has a really, really tough, big shoes to fill. And it would be hard to imagine that this is better for Berkshire Hathaway. So I'm oversimplifying, but one way to think about this is, does Warren Buffett stepping down and Greg Abel being promoted and replacing Buffett, is that generally a good thing, a bad thing, or is it completely neutral? And in my mind, it's hard to think of a lot of situations where this is, a step up. I mean, I can't think of this being a step up because, again, Buffett is the best. The reason to be hopeful, however, is, again, they've built an amazing system. And the story that I want to tell you is that there's another company where a famous CEO stepped down. It was Steve Jobs. Unfortunately, he was ill. He was terminally ill. He had to step down. He appointed his chief operating officer, Tim Cook, to become the new CEO of Apple. And in that situation, a lot of people, including me, lost confidence. I thought, well, a new operator, unknown guy who is never going to be as good as Steve Jobs, uh, you know, stepping in, that can't be good for the stock, Apple stock. And sadly, I actually sold Apple after Steve Jobs stepped down. But as it turns out, with the benefit of 2020 hindsight, Tim Cook did a great job. Steve Jobs had laid the foundation, and Tim Cook, although he wasn't as much of a showman as Steve Jobs, he was able to take what Steve had built and to take it further and ramp it and scale it. And so, could Greg do that as well? That's exactly what we want to see here. But I don't think it's an absolute yes or no at this point.
And so if our listeners had some money to put into the market and wanted to do it, there's probably, I would think, better options to consider, right? Different stocks to consider rather than this one where it's a little bit uncertain.
The answer to that question I think you hit the nail on the head. You should be analyzing all the potential options or all the stocks that you're considering buying and do a rational assessment of which one you think will give you the best chance of achieving your financial goals. And so, assuming your financial goal is capital appreciation, meaning you want to buy something that goes up in value, and it's not just to preserve your wealth or to generate income. Yeah, I would say that you'd have to consider some other companies for the reasons I mentioned. And right now, there are a lot of options. I mean, we've talked about AI. We've talked about that the AI might have been a bubble. Well, that bubble did burst, and prices did come down. And so some of those companies they may be of consideration, or you may want to consider them. The one thing to note is that, with the exception of Google, most of these other companies are not diversified. Google is very much a holding company, albeit all in tech. So that's more of an apples to apples comparison to Berkshire. But to answer your question again, yeah, you absolutely should be thinking and looking at all your options and picking the best one.
So for this has been a very important discussion about Berkshire Hathaway. For our listeners who want to continue following this story and get more of your perspectives, what are the best next steps?
Yeah, so would be grateful if you would subscribe to the Fiscal Fortress. That way, you'll get notifications whenever we post new content. Feel free to like this video, share this video, and as we've mentioned before, feel free to email me at this email address below, or if you have any legal questions, feel free to email Michelle.
Yeah, and you've invited the audience before that if they ever wanted to talk with you about just what companies you're thinking about that are interesting to you, that they could also do that.
100%. And I mentioned a shopping list. If you like, my thoughts on your stocks to buy that you're thinking about buying on your shopping list, feel free to send it to me. I'll give you my honest reactions and opinions. And similarly, if you're interested in what is on my shopping list, I'm happy to share that with you as well.
That sounds like a great offer. So, Eric, can we have one big takeaway from today's discussion? We talked a lot about Berkshire Hathaway, Warren Buffett, Greg Abel, but if there's one thing you want our listeners to be sure to have learned from our episode, what would it be?
Yeah, I think the one thing is I would be careful about buying this stock. This stock has Berkshire Hathaway has the Buffett premium with the greatest investor of all time stepping down from the helm. It's not a sure thing that this will be a great investment going forward. I have confidence it probably will be, but there are a lot of other good options on the table. So I would consider looking at other companies.
Well, I hope our listeners enjoyed this episode and listening, and feel free to please like this video, share it with your friends, subscribe to it. Let us know if you have other topics that you'd like us to cover, and definitely feel free to reach out to one of us if you have more questions. Thank you for listening.
Thanks. Take care.
The Fiscal Fortress, where wealth meets wisdom.